Hello traders, Gary Wagner here, just about 11 o'clock in Honolulu, 4 o'clock in New York. It is Wednesday, 16th day of December, 2015, and you are watching Trending Markets. We do have the S&P 500 on a runaway rally along with the Dow Jones Industrial Average. Of course, the FOMC meeting, the final FOMC meeting for the year has concluded. Net outcome is liftoff is officially here. They have initiated the first interest rate hike in almost a decade, and we have a major relief rally going on in the markets with the Standard & Poor's up about 27 points at 2064.75. We sent out a special trade alert this morning. We sent it out just as the announcement was coming out. We saw some pretty severe gyrations in the market, but once I felt they were stabilized, we sent the alert out. Traders taking that call, you're in at roughly 2043. We'll look at that trade in detail in a second. First, let's take a look at the Dow Jones Industrial Average, up 223 points at 17,748. So a tremendous rally in the U.S. equities markets. Now, the dollar, which had been trading lower for the better part of the day up until the announcement, has turned around, although turned around very slightly, up about 0.1% at 98.32. And the big news also is that crude oil continues to slide. You can see that on this daily chart with oil dropping almost or over 4.5% at 35.65. So traders, I absolutely believe we've positioned ourselves exceptionally, especially since we got in roughly 20 points below where the E-mini is trading right now at 2063. A couple of charts I do want to look at. One is going to be a live chart. One's going to just be a copy of the chart that we sent out this morning. But this is a 15-minute chart, just to give you an idea of the kind of volatility we saw in the market. As we went into the Fed announcement, and that's these candles all prior to this area right in here, once the announcement came out, and I draw your attention again, 15 minutes, very short term, but where you've got in a 15-minute period in this candle, the high being 2056, and the low being about 2031, you had this tremendous move, just incredible volatility come into the market. It then seemed to stabilize, and as it was coming up, it really started to gyrate. Here on this candle, I was a little hesitant, but it's when it started coming off of this candle right here, this green candle, that's when we actually made our move. And I'll show you what that looks like. You can see we're having a little bit of backfill as we come in at around 2060, 2061. But this is the chart that I sent out to subscribers, and we'll compare that to the current chart. But as you can see, market was roughly at, call it 2042. It was a fast market. That's why we're putting ourselves in at 2043. But my sense was that this type of rally that I was expecting to actualize would come in after the Fed made an announcement, if in fact they kept to their word and kept the idea of a liftoff and started to raise interest rates. Now, you just saw that one chart. That was a static chart. That's the chart that I sent out to everyone. Now, take a look at the market. And when we do this, you can see a couple of things. One, we've got this three-river morning star, and we have our confirmation now. Now, it is a variation, but in essence, what you're looking at is after a defined downtrend, we meet that criteria. You get a large red candle. You get a small-bodied star gapping near the bottom of this range, and then you get a green candle. That is your three-river morning star. This is your confirming candle. More importantly, 200-day moving average, we're above that. Of course, 50-day moving average, we're above that. And it looks like we might have the 50 cross above the 200-day. It has not done so as of yet. You can see they're just a couple of ticks apart, but nonetheless, we've got a solid move in the market. As I said, currently trading roughly at 61, and we're in about 20 points below this price point. So traders, quite obviously, It is my recommendation that you maintain your current long position in the E-mini Standard & Poor's. We've got about 20 points on that. Now, let's take a look at the stop and the rationale behind that. If you recall, I put it below 33. Let's go ahead and erase this so I have my pointers back up. But as you can see, these lows here, I believe I put it at 1032. I have to look at the actual trade alert we sent out. But you can see this low roughly at around 31. And that's what I based the initial stop on. In essence, what I was saying is if in fact this market moves up but then starts to slip below the low of the day, we do not want to take any more heat. That's enough risk on the day, and we absolutely want to exit the trade. Market's trading now at 2063, 2064. We will look to trail the stop up, but we want to give it a couple of days and have it move aggressively above the 200-day moving average. In terms of upside targets on this trade, as I've said from the get-go, my sense is that we'll probably take a stab at these most recent levels at 2109. That's the level that I'm looking at. That's the level I would hope to exit the trade on. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another Trending Markets. Bye-bye.